Good morning, everybody. How's everyone doing today? Hope you guys can hear me. Please let me know. Testing. Morning to you, Miles. Great, thank you, John. Well, first things first, crude oil. The 9 a.m. mini session got short, right on time. Came up, stop held, came down, gave another chance to get in. Hit its first target objective. Modest 12 ticks, but the stop did move down. Take the risk off any remaining positions with the chance for larger gains. So that trade's still going. Anybody is in it. Crude oil will be one and done. Just like that. Always nice to start a Monday with a winner. Okay, Don, good question. Was just going to ask, or not ask, but show you. So this is a really slow day on Pound Aussie. We've had some slow sessions lately. This setup happened an hour and 15 minutes before the start, and then there was the chance to get in sync with the trade, but it was already up here by the time it was our start time. And then it popped up and came within a hair of money management. And when we miss something by a hair and then it comes off again, I mean, to me, it's already made the move, in other words. So normally when we move our stop, if it hits a money management level, we're not going to get in sync with the trade. And in this case, and you know, there's always the chance that it can come back up and win. Comes down, hits the entry, maybe you have another chance to get in on it. But it's just, you know, it's so arbitrary. We go 90% to target one. What did this go to? 89.5%. So just how we normally do it is when the move has already happened, so to speak. Just trying to stay true to the rules. I mean, really, you can go either way. But we always opt to cancel the trade, that the move already happened. Couldn't go any higher, came back down. What's wrong with the trade? Maybe nothing, maybe something. And we'll be geniuses in hindsight once it happens. But for our rules, when you miss by that close, especially with Forex, because now we have that fifth digit, that tenth of a pip, which we don't really use. We always just kind of round our prices, our targets and stuff. So that's the reason. Got to 82888. Money management is at 82894. So that would round down to 89. I mean, it missed by 0.6 of a pip, I guess, if you're splitting hairs. So, but anyway, that's the reason. And if this wins, then we'll be like, oh man, we should have got in. And if it loses, we'll be like, wow, good call. But we just try to be consistent and do it the same way every time, and that's the reason. And hello, Keith, and hello, Al. And it was a good question, Don. I'm glad you asked it because, I mean, obviously it requires an explanation. Anyway, don't forget we're in the September contract. Markets have opened. First trade of the day is already triggered in for the YM, 34,309. That's one you can grab if it comes back up. It did not go too far yet. 34,309, unless you're already in it, of course. The stop is at 351. And target 1 is the first objective with this plan. 34277. We'd have to make new lows of the day to get there. And it looks like it's already making new lows of the day. Every tick lower. And now that it's, see, that one just missed money management as well. So even though it didn't hit money management, if I would cancel the get in sync trade, I would not take it if it pulls up. Anyway, it did hit it. So now just trying to get to that target 1, and I think 77, there it is. So one and done again on the YM, hitting its minimum target objective for 32 points, $160 a contract. So one and done on our crude and YM chart. And while all that was happening, unleaded gas got into its first trade of the day. That one got long at 1902. And it's hitting its first target objective as well for 45 ticks. 1947. Although target 2 is probably a more optimal target to try to get to. Better risk reward ratios and stuff. Of course, target 1 is going to get hit more often, obviously. But anyway, stops move to break even on this one. And this too is one and done. Hitting goals with the first trade of the morning to start our second half of June. Good morning, Roger. And if you don't mind, please hit the thumbs up button. If you like the free session, please let me know by hitting the like button. And if you haven't subscribed, please subscribe. Then you'll get notifications when we go live. Checking on soybean futures with Counterpunch. Really nice market to add. Was not one and done today. There was a short trade here, which could not quite get to a target, and then it flips over and stops. Well, we use this red and blue line to confirm stop and reversals, and this is kind of unique because the white trade required the histogram to confirm, which did not occur yet when the setup happened. Well, looks like it did. There must be some other filter that's preventing it. Oh, I know why, because the line's red. It's in hybrid mode. Hybrid mode means you can only stop and reverse when the line is blue, and that's after the bar closes. So you look to the left, and it closed blue for a moment, but the price is too high. You couldn't get the entry, and then it closed red again, so it came off. Then there was another setup that turned green here. Well, I mean blue. And that too went too far. So hybrid mode kind of worked against us today, preventing the stop and reverse winner. So it's a good learning example, just because while it helps us a lot most of the time, no filter is perfect. And in this case, it prevented cutting the short or cutting the losing trade by a lot less and catching the winner for a 2-trade session. Now it's just one losing trade and still needing to keep trading. And that is the next trade. It's a short, 1469.25. And it just went through target 1 and target 2, and stop moves to break even. And so this will be a winning trade, but probably not enough to offset that larger loss. So this will need another trade even. So it's a unique way to, I mean, it's good to see these examples, because with Counterpunch Trader you have standard mode, trend mode, and hybrid mode. Hybrid mode only means that you don't stop and reverse unless the trend mode indicator has the proper color. So it keeps you out of trouble a lot, just not this time. Filters are always confusing when you don't have the big forest from the trees point of view. When you just see it once or twice here and there, you form an opinion based on the trade you're experiencing. But what you really need to do to determine if a filter is going to be profitable or not is apply it to a lot of trades and a lot of sessions. And that's where you learn the benefits of filters. Because you always give up something. Of course, that's true with all trading. Every decision you make, you're going to give up something to get something, right? So check out how close target 2 came on unleaded gas. I think it missed by a hair. Also, $19.72 is the target, and it got to $19.70, so missed by 2 ticks. And any multiple position traders with soybeans might actually come out ahead here, because hitting target 3 and now trailing lower. And there's a concept that I refer to, protecting your POQ. And it's kind of an odd way to say when you're coming from behind and you have a chance to get back to break even or even profitable intra-trade. The trade's not over yet. Maybe that's a good idea to take some profits and make sure it's a positive day. But this market, soybeans are selling off here, and that looks to me like a larger move, taking a gift from the trader gods, than that initial losing trade. And now it's coming up. So there's this concept that if you were to work this into your trade plan, you could test for it. That's the whole point, is you have to test if you want to believe in what you're doing, called protecting your power of quitting. And what that means is that if you, POQ is obviously says power of quitting, but we say it synonymously with hitting our trading goals. So protecting that means that if you lose a trade to start and then the next trade gets you positive, maybe you make an argument to take that profit and quit positive. You could test that idea when you're back testing. Protecting your POQ. And you can see that with soybeans, for example, taking profit down here would have definitely got you positive. You'd have to do the math with this. I'm not sure. It looks like it might be enough. It's pretty close to the same as this is a larger size trade that lost. But that's soybeans. Soybeans is a nice auxiliary market to trade. Alright, so now we got to figure out what to do for the rest of our session, seeing as though we just pretty much hit all our goals. So pound Aussie came up, and it's one of those things where, like I said, you know, we're geniuses in hindsight, but how we typically do it is when we get in with a hair, within a hair of a specific target, we have to assume we hit that target, because the strategy is pretty darn accurate, and we have to give it some benefit of the doubt, especially with Forex when there's, you know, that fifth digit. So anyway, too bad. It's a shame, because it would have been a nice winner to grab. But it is what it is. Could have went the other way also. If anybody has any questions, feel free to ask. Kind of nice when we get into the September contract on the E-minis. Historically, that's a contract that tends to do well over the years, I've noticed, but also it just signifies the beginning of summer, which is also really nice, especially with the world starting to open up again, at least this country, and perhaps the light at the end of the tunnel in regards to the COVID disaster that we've all kind of lived through this past year or year and a few months. I'm really happy to put that in the rear view mirror. So here's an interesting ETF I thought I'd pull up. U.S. oil. Speaking of COVID, this is the story of COVID right here. Taking us back to last year when we couldn't even trade the June contract. Remember when the June contract was the front contract and we had to literally trade the July contract? Remember how crazy it was? This is what it's done since. Making new highs today. This is a weekly chart. Making new weekly highs. Some low-cost options would be very profitable using these counterpunch setups. Looks like it's got a lot more room to go too. You think this is a precursor for what's to come inflation-wise? Oil's priced in dollars. Inflation means it takes more dollars to buy the same amount of whatever gizmo you're interested in, and I think you could see the trend here forming on this one commodity, and I'm sure you'll find it in many others as well. And just looking at our day trade chart, we were just talking about oil with a good chance of pushing up over $70 a barrel. Well, look at it now. The high of the day actually just happened a few minutes ago. It may have happened earlier too. I don't know. I have to look. But 71.78 pushing up on 72. And we all know those quarter century numbers are magnets. So is $75 a barrel imminent? I mean, if I was placing a bet, I'd probably say yes, especially with how this weekly chart is looking on U.S. oil, just kind of a proxy of the trend. This isn't the entire world oil market, but still it's going to trend in the direction of oil prices. Yeah, the high just happened, right? So I thought. And we probably should take a peek at the Russell just because it's occupying real estate. And nice trade that happened before the market opened, and then a nice short trade after the market opened. And this chart was also one and done this morning with the green trade. Spotlight Power Trader kind of putting on a show for us across the board today. And I don't know what happened. I had an NQ chart. Remember we were looking at it with the EMA crossover, and I don't see it. I don't know why it's gone. I must have accidentally deleted it or something. Recreate it just for fun. Let's see. That was a pretty large chart we were looking at, so let's stay with that for now. Yeah, for AJP, good question. For the YM14, it's target 1. I mean, you could opt for target 2. You could. But it's a larger chart. The thing is that you know how volatility changes, and right now markets have a lot of range, and it would be worth testing both. That's why I always encourage whoever is testing in the UTA spreadsheet to put multiple targets as exit points, so that you could examine the stats over time to determine which target is better. Target 1 will obviously get hit more often. Target 2 is going to give you a better risk reward. And if you have more than one position, you can go to both. So this is the regular spotlight with the blue trade added, the 20 SMA trade, on an NQ 6-point momentum bar. That's 24 ticks. Look how smooth it is. It's because the range is just so large right now, and it makes for great trading. But is this too risky? Well, what if you were to put it on a micro chart? Because these are nice looking trades. Now, this is not the chart we were looking at with the moving average crossover. We'll look at that next. Let's see. Let's change this to a micro. MNQ U21. 1/10 the size. The NQ is one of those markets where you can make a lot or lose a lot, so you have to really be careful with it. And obviously, you're not going to grab the 8:30 open because of the earlier trade unless you turn on add-on trades. Maybe there's a trade here. If this is close enough to the blue line, I'm not sure. But anyway, then the next trade comes, and that's the first trade of the day, and that's good enough. It's funny how the green trade went up on the NQ, went down on the Russell. Of course, there's another green trade that follows. When do you normally see on Spotlight a green trade up and then a green trade down in 2 consecutive trades? That's unusual. But you remember, the green line in the histogram doesn't symbolize it. It basically identifies trend strength. Regardless of the direction, if the trend is strong, it pushes a line up. It is a lagging indicator. We don't give it too much credit, but we do pay attention when it gets above the yellow line, because that's when the market becomes overbought or oversold. And then the green trade, taking a cue from that, produces a trade in the opposite direction when all the conditions are met with your exhaustion dots and your price action and your balance of power line. And so it comes off here, and then because of the strong move higher, caused the line to go up again, and that's what gave the opposite trade. It's kind of unusual. We don't really see that very often. So if we now change things up a bit, and instead we look at the unique fun with moving averages setup, the crossover of the fast EMA to the slow, it'll look totally different. Let's take a peek at it, because this is a unique way to use Spotlight that doesn't really get a lot of attention, not as much as it probably should. And then I'll put the moving averages on there too. Yeah, so it totally misses. Let's see, let's take a look at something here. So that goes on. These can go off. And then we gotta fix the settings on this calculator too. So one thing we're not interested in anymore are the filters that we use. don't need key level adjustments. Let's see what that looks like. Still, we don't get the setup. And that's because, let's see why. That's because of it crosses way up here, that's why. So the market's moving too fast for the fast moving average to cross above the slow moving average. It's set to happen up to 4 bars to the right, and if you'll remember, I was talking about how we can improve this setup by taking away some of those bars and making it more restrictive. But completely misses the V shape, you know, the fast move down, the fast move up, the fast move down. Spotlight's really good at that with its basic setups. This particular configuration is looking for something totally different, which obviously did not yet occur. And so it's still waiting for its first trade of the morning. And then instead of 5 bar max setup, we make it 2. And that took away this setup here that just happened. You notice that printed? If I made it 3, nope, still wouldn't work because it's still above. Fast one's above the slow. Remember, the white line's fast, the aquamarine's slow. So, looking for still, if you're more picky and want a higher quality trade, again, you know how filters work. Could eliminate a winner. If we put it back to the default settings, you'll see that setup occurred right there, and it's looking pretty nice. So it's one of those things that if you don't test, you never really know what to do over a long period of time. You don't see the forest. You only see the few trees here and there, which is not a way to make money. It's a way to lose money. I'm going to leave it on just because we're watching it, but really I'm going to put it back. Because the spotlight setup would be on the 3rd dot. That's the first bar that closes down on the other side of the balance line. But this is something different because it has the fast over the slow moving average requirement. So you want to have those setups close to the exhaustion dot bars for a higher quality setup, is the point. I'm just going to turn it to that now, since that's what we're used to looking at. Anyway, just kind of doodling here. Spotlight has a lot of tools in it. It's just a matter of figuring out the configuration for a specific chart and then proving it, and then practicing it, and then trading it. I'll be right back. All right, so sorry about that, guys. So, just wondering if there's any more questions. There's not a whole lot more to do at this point. Let's take a look at this NQ, though. So, after putting it to its more restrictive settings, it's more picky, it did finally give a trade. And that trade was a nice winner. I was trying to get to... I mean, you can make an argument for target 1. Those trades are big enough. Would have been 38 ticks. So that's 12 and a half. 12? No. 38. Is that... can't even do the math. 9.5 ticks. Points. 9.5 points. At $20 a point. And then target 2, 13,980.5, and it missed by 1 tick. So one and done, despite missing the early movement. That's the thing about Spotlight. It's not trying to catch every move. It's just trying to catch the move that puts the odds on your side. And of course, it's based on your inputs. So I kind of talked through why I changed this. Anyway, this is more of a learning thing because this is not a trade plan I've endorsed, but it seems to do well when the markets move. And of course, even when the markets have been crappy, it's done a pretty decent job. That's a 5, Donald. 5 range. So it's a point and a quarter, 1.25. So 5 ticks. It's done pretty decent this morning. And soybeans trades like the ES as far as its value per point, $50 a point, quarter point ticks, $12.50 a tick. Another interesting grain is, let's see, we used to look at this chart some time ago. I haven't looked at it in ages, so let's check it out. Wheat. Yeah, not nearly as much movement. This is the 200 tick chart. Yeah, so barely got, well, we should probably turn off. The add-ons could certainly add some confusion, so without testing it, I'd probably just want to look at the original trades and not all those auxiliary setups. Yeah, much cleaner. And one and done if you're going to target 1. 21 ticks, so that's 5 points. 5.25 points on wheat. Not nearly the same movement, but a tick chart looks a lot different than a range bar, obviously. But that's another auxiliary chart that maybe will give you one good trade a day that you might want to build a trade plan around. And I'm coming out with a Catapult Grains module, which might even be more interesting. The ZS. I don't think it's going to be a standard. There's a few things, Dawn, to account for. So one of the things is the minimum size needed for money management. In other words, how big is your target one? It has to hit target one to move the stop to break even. And if you don't give it some sort of a parameter as far as how large that movement needs to be, the stop moves either too soon or not soon enough. And I think I set it to either 5 or 6 ticks. I don't remember. Yeah, 5. So minimum ticks for break even stop. It's target 1, but it also had to have gone 5 ticks, which is the range of the bar. And it's also what I got for minimum ticks to trail. So that's one setting that you'll want to change, I think. And you may experiment with it. You might try 6 ticks. Maybe 5 is a little too tight, but that's, I think, the one we've settled in on from a long time ago. What else? Kind of think that's it. Yeah, I mean, that's really it. You don't want to use KLAs, set that to false. So other than that, I don't think there's much else to do. Although I did put it in hybrid mode, you might not, maybe you don't want hybrid mode. You could use hybrid mode manually and make the decision without the indicators telling you. Like if I turn it off, this chart looks totally different. By turning it off, all of a sudden the stop and reverse happens here that we talked about earlier. You see, all of a sudden now you see the trade. Because when you had hybrid mode on, it eliminated that. So it might be one of those things that you try both and see what you like more. See, it totally changed everything. And the long trade was completely missed as a result. Still came back and did okay, but I don't know. In my opinion, my guess is that they both work fine, just differently. 6 over here, half a dozen over there. Counterpunch is hard to break. All right, everybody. I'll give you another minute or two to think of any questions. If not, I'm going to say goodbye. I've got a very busy Monday. My son is graduating from high school today. So happy to put high school behind us. So needless to say, there's a lot of energy hustling and bustling around my house. So I'll give you a moment to think of any pressing questions. If not, thank you, Al. Appreciate that. Don't forget, John will be in here tomorrow. I'll be back on Wednesday. We'll do the crude oil report. And John, of course, will be here on Thursday. So I hope you enjoyed the session. Everyone have a wonderful rest of your day, and I will see you next time. Tremendous. Yeah, could you send me an email, please, with your phone number? I can't follow everyone's handles. Thank you, Miles. Oh, I think I know who you are. Tremendous. All right. Have a great day, everybody. Catch you later.